Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It's Wednesday. Hey, Wednesdays are always interesting days, and I think that today could be I think we could have a lot of activity in the equity markets today. So let's go and look at the charts. Let's see what we got ahead of us today. Well, in the treasuries, let's just note that although there was a little bit of a downside move in the overnight session, they mostly chopped around most of the session, and in the end actually kind of let up towards the end. Now, we are getting a little bit of a bearish move here right now, but let's just realize interest rates are around 1.7% for the 10-year right now, and options are pricing like the furthest away I'm seeing here, like the limit before March is like 2%. So for, around 1.75 would be the halfway point. Kind of makes sense to see some contrary flow coming in here and trying to hold things up. So, it could do anything here, but it wouldn't surprise me if we start to see a little bit of a pushback against that, right? You should note though that we're still steepening a little bit. That yesterday, in particular, in the 30-year, we steepened. So most of the move in the treasuries yesterday was in the yield curve, right? ES over here. Well, ES didn't have such a hot day yesterday. It wasn't terrible or anything, but that's just kind of where we are. Haven't had any like super big news events for me to mark here on my chart, but we did have some what was that, ISM numbers yesterday that disappointed, but maybe partly to do for that move. Okay. Oil, though, on the other hand, did pretty good yesterday, and they're doing pretty good again today. So oil just continues to look really nice. I mean, there was this decline here on the 19th, but since then, it's been holding things really, really well. Natural gas is still kind of in the range too, which is good, because if natural gas prices in Europe start taking off, that could be like really bad, right? That's why we're keeping an eye on natural gas. Gold and silver. Well, when we had that huge rise in interest rates, it really hurt gold and silver. But since then, they've been recovering and it looks okay. So we'll see, if they could make a higher high here, that would be super encouraging to technical analysts, right? Copper, still kind of in a range, but they're kind of eyeing that up there too, right? Now, on the other hand, in the currencies, Bitcoin, I'm a little concerned for Bitcoin. They're still chilling down here, guys. What's the deal there on Bitcoin? Eventually they're going to have to breach that 4,500 if they stay down here for too long, right? And then 4,000 below that, and then below that, it's ugly. So I don't know. Maybe they get a bounce at some point, though. It's very possible that they kind of languish around here, do a false breakout, and then recover. It's possible. Okay. And then we got the dollar. So the dollar continues to be relatively strong. On Monday, it had a pretty big move here, right? And there was some movement after the news, the economic numbers yesterday and everything. Overall today, a little bit lower, but we're going to have to keep an eye on the dollar. The dollar's a really pivotal piece. And hey, everybody keeps saying that the dollar is going to collapse, but seeing it up here at 96, it's awfully strong still, right? Now, let's come back over here to our main screen. That camera, guys, this camera is just so freaking amazing, isn't it? Wouldn't you say? Maybe I could maybe turn down. I'm gonna leave it with the way it is. I'm gonna leave it the way it is. We could adjust some things, but I'm not gonna mess with it. The skin tone is so skinny. Okay, so we got, what do we got today? We've got market services PMI. Oh, and FOMC meeting minutes today. Ah, yes, that's going to be really. I think that the FOMC meeting minutes could be one of the big surprises for the week. Just getting some insight into what the individual members of the Fed are thinking in there. You know, are they all tilting hawkish, or what's the calculus there? We could learn some things in the FOMC. It's not going to change like the overall picture, like are they going to raise rates in March and all of that, but it could give some color to what the Federal Reserve is doing that I think could really convince a lot of the holdouts that seem to think that the Federal Reserve is just never going to raise rates ever and that sort of a thing. So we might get some weird activity in the treasuries here today because of that, right? Because our main flow is going to be the FOMC meeting minutes today, then we might not get as much activity as we want the rest of the day. Let me just make sure that that's the main stuff we've got going today. Oh, we did have the ADP non-farm employment change, which was really good, 807 versus 405 expected. So that is really, really good. And those services PMIs, by the way, that comes out at 9:45 Eastern time is not insignificant either. All right. So I'm kind of looking at this yield here and wondering if is it worth trying to short it. But the trend has been down, and I don't know what caused that down move at the top of the hour. It's at 8 o'clock. So maybe it's better for me to kind of stand by here. Paul Krugman is criticizing the DeSantis administration, I see. The residence of the president of Kazakhstan in Alma-Ata is engulfed in fire and loud shots are being heard. And Forex Live tweets, the dollar moves a bit higher after huge ADP jobs report. That really is a very surprising ADP jobs report. Actually, let's come back here to Forex Factory. So here's the ADP. If we go back and we look at the history, oh man, well, we're gonna have to cut out that spike. Okay, so it's not. There have been beats and misses of about that size before, but it is definitely on the edge there. It's pretty significant. Interesting. Oh, so was this move? Yes, it was. Okay, so the move down in treasuries was because of the ADP. I'm not sure if the ADP is something that's going to move treasuries all day, though. Like, I'm really suspect that somewhere around 1.7 is reasonably priced for now. At this point, like, are they going to go up here for the day? It's hard. Like, let's just assume that right now the price that we've got is fair based on the news that we had and everything. What are the future flows going to be from there? I'm not really sure if I really have a very good reason to believe they can do anything. One thing that might happen is because the dollar is looking strong, we might see the 6J sell. But that would mean we want to buy here, right? So for now, I think wait, I'm gonna trade. Probably if I wanted to do something, I think that ADP report, if I was sitting here and I was just trying to trade that, I think I would want to be going long. Gold. I think that sounds pretty inflationary, you know? Ugh. Hate the spammers on Discord. Hey, didn't they make a change? I can report. Report spam. There we go. Submit report. Lovely. Lovely, lovely, lovely. Okay. How do you think the NASDAQ will react today? Well, you know, so if we're just sitting here, just based off of what we just said, okay, and I really don't know what the flows here are in the treasuries are going to do. I don't really see a strong reason for me to suspect flows either way. Uh, I am kind of a little leery of some buying flows coming in. Just as kind of like mean reversion kind of stuff, and that's why I'm a little hesitant to just be like, all right, let's buy this, you know, off of the ADP. Like they are moving up a little bit. Notice I'm not modifying my my longer term trade here. I think I want to only take contracts when it's really going on in extremes. So they really, if that had really moved the treasuries, then maybe I would take one off or something, right? Now, the NASDAQ, on the other hand, took a real beating yesterday. Those small caps and techs just got beat. Man, I have a small cap tech. I have Sumo Logic, and being in that stock is awfully tough these days. Is just, I don't think there's anything wrong with the company, but the way that because all of the analysts basically stopped coverage of it, it is just at the whims of the index. So when the small caps or the techs get sold, it just gets obliterated. And it was not pretty. But, you know, just remember that tech companies still are pretty attractive up until the 10-year yield gets to 3%. So even though they might not be the market leaders anymore, I think what we're going to see, or at least the rotation that I've been betting on, is that techs will stop being the market leaders and the market leadership will turn to banks. Is what if we're in a rising interest rate environment, that's what we should expect to see, right? So, but that said, if we're not going to get a crazy move in interest rates today, that could give the NASDAQ a little bit of a breather, right? So doesn't mean that we'd be buying a hand over fist or anything, but yeah, I definitely think if I was forced to take a trade in the equity indexes here, I'd want to be long. And since interest rates aren't having a dramatic move, you know, the techs are probably in for a little bit of relief. Yeah. That's just kind of gaming out what I see like with the current conditions. But of course, that all changes if a strong flow comes here into the treasuries that we're not anticipating, right? One thing that we should remember or keep in mind is that a lot of money tends to get put to work on Wednesdays, right? So they come in on Monday and they say, "Oh, okay, this is what we want to do now. We've thought about it on the weekend. These are the moves that we want to make with our portfolio." They plan it all out on Tuesday and they execute it Wednesday. So Wednesday statistically tends to have more activity. But we've still got non-farms, right? Non-farms is gonna kind of hold things back a little bit still. So it's kind of a tough play. I was really hoping to come in and have some strong reasons to trade based off of the ADP, but just because of the way that they reacted to the ADP, I kind of feel like I'm not that interested. Next week has Wednesday news. Yeah. When I've run my own statistics, Wednesdays has more activity, and Monday tends to have the least. So, and then Fridays are weird. I think that I always get. I think the reason that I always seem to get screwed over on Fridays is because I don't consider the end of week currency flows. Oh, okay. Big caveat here on the ADP. The zero hedge here is pointing out ADP signals biggest job gain since May, but ahead of Omicron. Omicron's impact had yet to be seen. So we have yet to have any real data that kind of tells us whether Omicron is actually affecting the market or the employment situation. Friday is the worst for you and you don't do them? Yeah. I think Fridays are probably the worst for me too. Nothing else new here on Zero Hedge since I came in and looked at it when I first woke up. Let's see what we got here on Twitter. Did you guys see that Joe Rogan is moving to a Twitter platform called Getter? Twitter clone called Getter? And I was looking at it. Actually, I think it's getter.com, right? No, yeah, it is. It's getter.com. Getter.com. And you can explore now. Hey. And then when you come in and you explore, you basically you get all of the right-wing social media personalities tweeting stuff, right? Jason Miller and Gateway Pundit, right? So I'm looking at it and it's like, oh, okay, it's Twitter. Basically, it's Twitter, right? Not a darned thing different from Twitter. So there's Getter and there's Gab, and Donald Trump is supposedly going to make his own Twitter, and I'm sitting here like, why do you choose that one? Why do you choose that one? Although it also kind of makes you wonder, with that SPAC of Donald Trump's, right? I was doing research yesterday. I was thinking about making a video about this, but I think they all seem to think that something's going to happen on the 16th. So I think I want to wait until then and see what happens. Although I think they're going to be disappointed, but I'm just going to wait until that. And I don't necessarily want to get into the game of like reporting on individual stocks, but I can kind of look at it and I just that Devin Nunes is becoming the CEO of it. He's never run a company before. I've never seen anything that tells me that he is somehow has some insight into social media that would make him good at this. I'm just like, why him? It feels like it's just an appointment to reward him for being loyal, sort of a thing, you know? And I'm looking for an appointment that says we're serious and we're really going to turn this into a big platform. And then the second one was that they partnered with Rumble. So Rumble is kind of turning into the right-wing video site. At first, it was what was the one that was called? What was it called? It was a dumb name. It was a name that was like, what were you guys thinking when you picked that? You didn't see that? It was in there. BitChute. Yeah, that's right, BitChute. Like, what the heck kind of a name is BitChute? So Rumble is becoming more of the place. So they partnered with Rumble, and like Rumble's going to provide their streaming video and all of that other stuff. And I was like, yeah, but aren't you going to do that yourself? How are you going to make your own video platform? And that's okay if you're going to utilize somebody else to get you started. But then why aren't you buying Rumble? You know, or maybe they do buy Rumble and it's just because there's still a SPAC that they can't. I don't know, but like that kind of bothered me too. I'm kind of feeling like it's not like they think they're scamming people per se, but it just doesn't seem like the Trump world is taking the SPAC very seriously. Is kind of what it feels like to me. You know, you want me to invest a bunch of money in it, and y'all's just kind of toying with it, right? So I think I want to make a video about it, but I will wait. I think the reason I had the thought about the video is because I had a couple of streams about it, you know, and I actually get some hits from the ticker DWAC. So I was like, okay, maybe we could be competitive in that search term. Ooh, which reminds me, by the way, we should check on our video because I did a little bit of promotion. I wasn't too happy with the way that my video was performing on Monday. It wasn't bad. But I felt like we could do better. So I went and I did a little bit of pimping, and I changed the thumbnail. You see, I made it watch this before you start day trading. Successful day trader traits. I really want to try and get that search term, but we'll see if we get any search hits for it. So that's what I want to see is if we come down here, probably a lot of them traffic sources external, Reddit, Facebook. Yeah. It's really funny when you submit it to Reddit. It seems like everything gets downvoted there on the day trading subreddits, and you have to have a couple of people to upvote it first for it to stand a chance, which I don't really get because the stuff that tends to filter to the top tends to be really stupid. But anyways, oh, okay, so search. You know, I am getting some traffic for the term day trading, so that's cool. I'm looking more for like successful day trading. But we'll see. Hey, the trajectory that we're getting here now is good. It's more, you know, in the middle of the line, so that's good. I like that. And I thought it was a good video. You guys watched it, yeah? Or if you haven't watched that video, make sure you watch the video and leave a comment. I don't know. You know, the other thing about if I make a video about the whack is that we get comments, because I really want to see more comments on the videos, but I feel like I'm like so thorough, like nobody really has anything to say. Maybe I need to start putting stupid mistakes in the video just so that you guys will point them out. Maybe you know, make trivial little mistakes in there so that everybody comments, oh, you said this and it's actually this. I did say I was thinking about shorting 1.68, didn't I? It wouldn't have been a bad trade. That one we could just chalk up to luck though. Like if I had taken that and I'm winning right now, we maybe just chalk that one up to luck, because I didn't necessarily have any reason to think that we were gonna see that flow. I just kind of have this suspicion that we're fairly priced and that you're gonna see pushback. I guess that like it could be a potential flow. Like I am pointing out a potential flow, but I don't have any information that really tells me that like there's a high probability of that flow coming, you know. And even here, like, okay, so now we're at 1.67. Am I going to continue to see that flow, or are we going to push back even more? It's possible, right? It's actually very, very possible. But I don't know. Like this, I could take it, and this could be right where it turns, right? Didn't finish going down through Twitter here. Oh, Gary Norton was tweeting up a storm. What's he got here? Oh, this thread. Thread on that JP Morgan option trade. Don't have the space for great detail now, so I'll focus on what you should take away from this saga clearly. There's great differences of opinion on how and whether the role of the option trade would affect the underlying market. Some experts and pros called it completely wrong. In my feed, a small minority called it correctly or close to correctly. Well done, though, to those who admitted afterwards they got it wrong. I saw one presentation from an options expert that had so many inaccuracies it was astounding. Confirmed that not all experts are really experts. Well, that's not. That's, in these days, what's required for you to be an expert? You got a lot of people following you on Twitter. That's what it seems like to me. I'm not an options expert, by the way. Some commentary was so far off the mark with my own experience that I questioned myself and made many calls to ask others' opinions. I always asked, could I be wrong? Initially, I couldn't believe that so many experts could be so misguided. Many demonstrated complete misunderstanding of how options market makers work. For good grounding on how option market makers trade, I'd suggest listening to an interview from a few months ago by Chat with Traders with the head of an options market making firm. Some demonstrated a lack of knowledge as to how large trades are executed and how the execution of large trades need to evolve as they become more apparent. Not to mention how the known unknowns and the unknown unknowns, the conviction certainty of some commentators was incredible. The takeaways: if the so-called experts couldn't agree with how the trade rollover would affect markets, and if many got it completely wrong, why should any retail trader think they will do better? Well, I don't know. If I think that I have good information, then I think I have good information. What else are you going to do? Right? Sure, maybe you'd not play the game. Just make sure that you know the market well, right? That's a hard thing to do. If you've never been in the industry, that's a hard thing. Like I find that if you're in the industry and you've kind of got a hint of like what they do over at the firms, like you immediately know what sort of things people are talking about are bullshit and which ones are like really useful information to know. But if you're not, that's super hard. And I hope that when you guys listen to me here and I talk about that sort of stuff, that it's useful to you guys. I have consistently stated that trying to work out and exploit the trade activity of bigger traders is a red herring, even more so with analyzing option market makers who are among the most skilled and best risk managers in the biz. Retail traders are unlikely to find edge doing this. Well, so I'm not sure I completely agree with him on this. So what you've got to do is you've got to be able to identify a very specific informational inefficiency, right? You got to have a piece of information that you know for a fact, like you can prove empirically that is true. And basing it off of the option market activity tends to be like X is a little bit not a very good one, right? But, the Federal Reserve is going to raise rates in March or June. That's a really good one to go off of, right? And it can often be information that like everybody should know, but it doesn't get correctly priced by the market, right? Because the markets are not informationally efficient. So there are places where you can find edge. And then what you've got to do when you find an inefficiency like that is you need to be able to identify a flow that you can piggyback on, right? That will take you to it being priced fairly. Otherwise, you end up in the situation that I was in oil, where we're like, well, we know that oil is going to recover here, but we took it at the wrong time because the OPEC flows, screwed us over. And so if I had more experience in the oil market, I would have known to wait for that, the meeting and everything, and tried to piggyback on that flow, and then it would have been an amazing trade, right? I learned something interesting about the NinjaTrader tape. There's a configuration that allows one to configure if the trade happened above offer, below bid. But yeah, their tape is useless, man. I must say. Here, I'll show you. Because again, where is their time and sells? Because again, the problem is that what they're showing you right there are the fills, not the market orders, right? That's the fill feed. So there was somebody with a 50 lot there on the limit order that got filled, right? What the reconstructed tape does is it takes all of these transactions that happened at the same time in between level 2 updates that because of that must have all been filled by the same market order, so that you can see how big the market orders were, which I think is way more useful. With this one, I feel like this one is just like practically useless. Oh, the reason why you see such a print on the tape that way is because the computer didn't have the chance to update the last best. Yeah, that's probably the case. Like if you get a situation where it's past that, it means that that the fills that came in didn't match up with the level 2 feed because they're separate feeds. They're not synced. This is why what I don't understand, this just like, so like there's this whole thing where like you could get a message of an order being filled like in the future potentially with the way that things are done, right? But what I don't understand is why don't they have every message that gets sent be sent with an exchange timestamp? If everything had an exchange timestamp, wouldn't that solve the problem? Because everything would be synced to a single clock. It would be synced to the clock on the exchange. And so if the messages were received by me out of order, I should still be able to put them in the correct order because the exchange timestamp should still be correct. Why don't they do that? I don't understand. Anyways, back to Gary here. I find it hard to think of a more misguided trading plan for retail traders than to try to identify and exploit perceived weaknesses in the option market maker's positioning. Well, you're probably very unlikely to find one in market maker's positioning. That's true. Yeah, just as order flow trading morphed into just find the big volume areas, so options analysis has become just find the big trade / trading areas. Both are new forms of unreliable technical analysis. I think that, so let's respond to him here. Mm-hmm. I don't see the point on them having such a setting. It gives one wrong hopes. I don't know. I don't think that anybody uses it. Oh boy. Democrats scramble to lock down Senator Manchin on the filibuster, so they're trying to do some legislative shenanigans today that are probably unlikely to work, eh? New here, what do you trade? Well, so I have like a little bit of everything up here, but I mostly focus on 10-year treasuries. 10-year treasuries, and occasionally will play the S&P 500. I'm not very good at the S&P 500, to be honest with you. You know what though? We need to take a more of a YOLO approach, don't you think? Don't you think? Shouldn't we be taking more like, well, I don't know if I really like that price though. Let's kind of wait here. Maybe we get another little oscillation, and maybe we can try and take a long trade in the S&P 500 for your entertainment purposes. But we're doing it. We mostly focus on the treasuries. But today is not really. I'm not really liking my setup today. Today might be a dull day. I hate doing that. Like yesterday, I could tell you guys were a little bored. It was like we had a good trade. It kind of went a little bit, but then it came right back and we scratched it, and that was that. And it was kind of like meh. I was immediately afterwards. It was a little SPXL. Yeah, well, we trade futures, right? So it's called it's ES is the ticker symbol. Or like if you were to go, it's usually like a forward slash to indicate options. So like if you were going on to TradingView, it'd be /ES. And then you'd have to pick which month you're going to trade. So you trade the front month, and it's like apostrophe or exclamation point 1. LGVN, that's a ticker symbol, right? Well, I think that that ADP number is good, and that we could see some bullish action in ES today. But let's just kind of see. There is probably going to be a little bit of a fight there at the open, right? Certainly looking not too shabby at the moment. Oh, you trade the why everybody loves the NQ, man? You're all crazy. I think you guys are all crazy. I mean, I I admire it. But I still think it's crazy. It's too fast for me to click stuff in there on the NQ, man. It's just a zany instrument. You agree that it's nuts. Yes. I really don't get how. I mean, I guess when it's a little bit quieter, but when things really get going, man, even if I make this like the full screen and I use the smallest font possible so that I can see as many levels as possible, it's like it's impossible to pick a spot and click, and you know. There, I finally finished my response to Gary because I love him so much and I want to talk to him about it. It was like people were making some prediction about what JP Morgan was going to do based off of the options market maker positioning, and it didn't play out the way that all of those people said it was going to. And so he was talking about how it was kind of dumb to try and play that trade. And I think ultimately he's right, but I also think he says a couple of things in there that aren't necessarily correct. Like options, where options are, strike prices are being taken and everything, can be really good places to look for ways to predict future orders. Is just that like I think that the system is so complicated, you know, like trying to come in and say this level is going to hold based off of XYZ in the options, I think is a little foolish, you know? Like you still need to have a flow, right? Okay, well, so speaking of which, this did what I wanted to do. So we will. Air Cages wants me to take a trade here, so I'm gonna do one here. I'm gonna do one here in the E-mini. Probably shouldn't. I probably used the wrong account. That's fine. It's not a live trade. But I'll take 2 contracts, maybe 3. if they'll fill. Might be one of those cases where they kind of they shy away from the 4780 for a long time, and then eventually they go and take it, but not before stopping everybody else first out. Yeah, we'll see. But I'm thinking that it's going to be a bullish day today. We'll see. There might be like some bear moves off of the open though. Like that happens a lot, right? Where first little bit is a sell and then they recover and they move up. Yeah. You use sink or swim and use the grid. Oh, isn't that the same thing as the DOMs that I've got up here? I don't know. I just feel like it moves. I feel like that it's a game for algorithms. Like I think that the game to play in the NASDAQ is watch the other ones and try and arbitrage the NASDAQ because it has so much movement based on the other two. And that's something that would really be better to do with an algorithm. But it seems like every retail trader gravitates towards it, not because there's something about that instrument that gives them a specific edge, but because it has the most profit potential. And the problem with it having the most profit potential is that it also has the greatest loss potential. And so what most retail traders do is they just go and immediately blow their account out on it. Yeah, don't need a stop loss with sim, just flip sides. Well, I intentionally kind of don't try to not show things, but stay in the market all stream. But I'm still in this trade in the 10-year, man. I'm still short the 10-year. I've been in that now for, like what, 3 weeks? What's wrong? Why doesn't that one count, Air Cages? Look at this. I've made it theoretical $6,200. Are you not entertained? Come on. Nah, I get it. It's fine. Yeah, see, they're gonna go just beyond. That's why I didn't put a stop in there, because I'm like, they're gonna go just beyond what we think is safe. They are getting like an ATR stop right now at this point. So they're gonna go just beyond what is safe, and then they're gonna flip around. So that's why I'm gonna be stubborn about it. So if I'm wrong, I'm just gonna look like a complete fool, right? I'm okay with that. The edge here is taking on the risk, right? So that is pretty entertaining. Not gonna. Oh, good. I have to say the Seth Ellis CTA fund. It's right at the moment. It kind of looks like I should just open a CTA fund, right? I need to go and get the appropriate. I think I need a Series 7's license, right? I don't know what else you need to be able to run a CTA fund. Go get all of the appropriate licenses, and then y'all can send me your money. You have to be rich, of course. You either have to be rich or you have to be a certified investor. So you're all going to have to go take the test, and then you can give me all your money, and we can do $100,000 short bond CTA fund. Well, you're saying the small bull flag. What I see here, I don't find this thing to be predictive in necessarily, but it's definitely a thing. Let me show you here. So if I come over to this chart, you see this little like yellow and purple line? That's an average true range stop. So essentially what it is saying is, what is, the ATR, and then show me a stop, give me a trailing stop based on the ATR. So if we're short, then it shouldn't come back more than X ticks. And if it does, then that's outside of what the standard range should state. And if you do that, then it crosses over and they start saying now you're long and whatever. So it's like a stop and reverse kind of a signal. And I find quite often So you have some situations like, say, here in the back, right? They're on a little bit of a downtrend, and then it turned into an uptrend, and they stayed on the uptrend. And then you can see here, they come right back to the ATR, but they stay above it, right? It's good. And that's when you start to get these really strong trends. But there are also these situations like this one right here, for instance, where it's like, you're in a downtrend. They come up just enough for the ATR to be breached and everything. And then they go back short again. It's like they dink around with that line. Like, I swear they dink around with that line. So I tried doing a bunch of back testing to try and sort out, if what's going on there. It seems like it's a behavior that happens, but that it's not one that I can really exploit. At least not with the simplistic kind of analysis that I was using, back testing with. But it's definitely a thing. So I'm sitting here like, if I want to go long, and they just kind of broke through that ATR, then that's probably a really good spot for me to try and work my position in, right? So that's why I was interested in that spot. Can't you just bypass all that by saying past performance guarantees future returns? No, you're talking about having to go and get all the licenses and stuff, aren't you? Yet? I really want. I have one of the books. You see that dark blue book on the end of the bookshelf there? That is the Securities Training Corporation Series 7 manual. That when I worked for Goldman Sachs, there was a girl that very, very nice Indian girl. She was just so kind and friendly, and she was studying it, but then she eventually left the firm. She wasn't interested anymore. But the thing is I don't think she wanted everybody on her team to know that's what she was doing or something, because she hid the book. Like, or maybe it was that she just didn't have room. I don't know what the deal was, but the book was like in a spot that you wouldn't expect behind because you get like this. Well, you don't get cubicles. You just got like this desk space, and then every desk has a little cabinet next to it, and a bookshelf. And this was behind the bookshelf, up underneath the table where all the wires are. So it was there. And so she didn't work there anymore. So I called her up and asked if I could have it. She wasn't interested in having it anymore. So that's how I got that. And I took it home and I started reading it. And that's, one of those long lists of things where I'm like, Seth, you're just too lazy, because you should have read that book and taken the Series 7 exam by now. But apparently the thing is that you have to have like a firm has to sponsor you to even take that test. And it's like a decade old now, right? So the fact that she had to hide, well, I don't know if she was necessarily hiding it, so I don't know. But listen, it was like a cutthroat place. Was no, I don't think that's what was going on though. I think that it's kind of more like you just don't want to talk to people about it. And you don't want people to think that you're not fully committed to your current job because you're trying to go and make a change over to something else, right? By studying that. So I don't know. I don't know why she had it there, but I got it now. Excuse me. It was definitely a thing they would do where like I remember there was a time we were working on a Jira integration, and some other group in another technology group was working on a Jira integration. And in a normal company, you would say, well, that doesn't make sense that we have both of you guys working on Jira integrations, so only one of you guys should do it. But that's not the way that happen at Goldman. What happens at Goldman is you do it, and the one that wins and gets the prize, and takes over more stuff and ends up making more money, and the person that doesn't, ends up moving. They don't necessarily get fired, but they lick their wounds and they have to go on to something else. It's a competitive there, and you're competing against other groups internally all the time. It was effective. Sometimes though, the criticism I will levy at them is that I felt, especially for some of the guys in the DevOps, that they are really trying to squeeze everything they could out of people for as little as possible, which I didn't think was really in line with what they want to be. I think that they should be saying, yeah, well, we're going to work you hard, but we're also going to pay you the best and everything else like that. But I didn't feel like that those people in DevOps were really getting paid what they were worth for the amount of stress that they had to go through. Did I say DevOps? I meant operations. Like, they would have stuff where it's like, there's a trade that didn't match up and then they had to go and fix it, right? And there'd be so many of those that would come in a day, and so they'd have to fix them all. So a lot of it was, there would be a day where it was just a crazy busy day, and so they're working hard and they're staying late and everything. And then you get these crazy people that, because if you're not going to manage your work-life balance, the company's not going to do it for you. So they'll just work 80 hours a week or whatever, and then they're not making enough to justify that. Heck no. So that was the one thing, is and that kind of came up with some of the investment bankers where they were saying they weren't paying us enough to justify how hard they were working us. There was, you remember that there was that whole drama on Zero Hedge was posting about it. I mean, that's the thing. I think that they're kind of getting around to fix it though. Data released by UK ONS reveals how widespread Omicron infections were in the UK in the week ending December 31st. 1 in 10 Londoners had Omicron, as did 1 in 15 people in England. Yes, so we're all going to catch it. I saw this thing the other day from a medical doctor. I think we should just chalk this down as just his opinion, but I thought it was one worth considering. And he was saying we should be grateful for Omicron because it really is not very deadly, and it's super infectious, which means that like everybody's going to catch it. So, and it's going to replace all of the other variants. So it's like it's the perfect way to get that herd immunity. Like, we'll go through Omicron, and then after that, theoretically speaking, according to him, coronavirus shouldn't be a big deal anymore. So everybody will have had it at that point. Could be wrong. But sounds correct to me. It's kind of interesting how quickly it is spreading. New variants aren't going to get any more deadly. That's right. Yeah. I was looking at it because yesterday, oh my gosh, there was on Reddit, and I forget what subreddit was, but there was a subreddit drama thread about it where there was an argument about the vaccines, and there was a lot of people who were complaining that they had gotten all of the booster shots and everything, and they still caught it. And then they were all saying, well, it doesn't guarantee that you're never going to get it because it's not 100% effective and all of these sorts of things. But I think that the problem is that like, even if everybody gets it, like even if it was like 100%, what is the word? If everybody got it, it wouldn't kill the virus. Like, the law of large numbers is a lot of people will still catch it, and with a really dedicated effort. So for instance, like measles is probably a good example, actually. there's a lot of, I was reading about measles yesterday. There's a lot of really interesting things went on with measles. So Measles became a big thing in like the 1920s in the United States, to where the government was tracking it and everything. They developed a vaccine with it. It took like a good 10 years between when they first made the vaccine and when it was like available to the public. And the first round of it that was available to the public was really nasty. Like you didn't want to get it. Usually it was a bad experience. You got the vaccine. So there was a lot of vaccine hesitancy because the first round of it was so poor, right? And but you know, they fixed that, and then the government went on a dedicated campaign to get everybody vaccinated, and forcing people to get vaccinated in order to go to school, forcing them to get the measles vaccine in order to go to school, was one of the turning points that really allowed them to get widespread vaccine compliance, right? But the thing is that even with all of that and the widespread compliance, it wasn't until 2000 that measles was considered eradicated in the United States, right? So even with a vaccine, because the measles vaccine is now extremely, extremely effective, right? So you got an extremely effective vaccine and practically everybody has it. It still took several decades for them to completely eradicate it, right? Meanwhile, you've got all of these liberals out there saying, well, if everybody just had gotten vaccinated, this would be over already. No, it wouldn't. There's law of large numbers means that even if 100% of people have the vaccine, and it's like 90% of effective. So if only 10% of the people catch it, and then, 0.5% of those people die, it's still a lot. It's still a lot. Right? So what if Omicron just mutates a new variant for next season? Well, probably it will. I mean, there probably will be a new variant next season. It's just that because we're all have natural immunity against Omicron, we're going to have increased immunity to the variant, right? The problem is just that there are probably too many who get infected at once, and there are a lot of vaccine opponents who get sick. Yeah, well, it does sound like that a lot of the vaccine hesitant are getting sick. But I hear conflicting information on that one. Like I think that probably if you go and you look at it, this is kind of like a Bayesian sort of a thing, right? Like you look at the number of people that aren't vaccinated that get it, it's probably a pretty high percentage. And then you look at the number of people that are vaccinated that get it, it's going to be a very, very low percentage of those. But because the number of vaccinated people is so much larger than the number of unvaccinated people right now, you can very much get the situation where you go into the ward, there are still more vaccinated people with it than unvaccinated people with it. So, and then I'm always getting conflicting stats all the time. Like I was seeing some people in one of the threads saying, it's like 90% of the people that are in the hospitals are the unvaccinated. Or, but they're like just spitballing it. They're not like, I don't get a source cited or anything like that, so I can't make anything of it, I tell you what, if this is the way that things are for something that is really should be relatively straightforward. I mean, like, of course, the science changes, and especially in a situation like this, we're going to be learning a lot. And so a lot of what we know or think we know is going to change. But at the same time, there was situations. Listen, let's be honest. The government's got to be honest with you. There was times where they lied to us. Like this whole thing about like, don't go and get masks because they don't do anything. And they were really only saying that so that the medical profession could get it, and then when they procured what they thought they needed, then they told the public to mask up, you know? Like, come on, they straight up lied about that, right? They were manipulating public opinion to get people to do what they wanted in that particular moment. And then with the assumption that, oh, then we can just turn around and say something else and they'll just go along with it, right? That totally happened. You can't do those sorts of things. So it erodes trust. And if this is the way that it is with something that, you know, everybody in the world should really be united on in terms of like, you know, this is a bad thing, we don't want it to happen. What is going to happen when, you know, it's like China versus the United States in a conflict? There's going to be so much information out there floating around. It's just going to be impossible for any of us to know anything. It's just really almost sickening to think about, you know? TLA says, personally, do not think Corona is a big issue next winter. Yeah, probably not. You know, when you look at, so one of the things that they're finally admitting to, this is one that, so here's the other thing you can't do, okay, is you can't shut down legitimate discussion, okay? So you have people who are scientists and doctors, and they're talking, and they're saying something like, well, it seems like our test is unable to decipher between coronavirus and the flu. And everything gets categorized as coronavirus, and there's no flu cases in 2020, 2021, right? And so they're saying, well, it's probably because the flu cases are being categorized as coronavirus. And if you said that sort of a thing, you'd get banned on social media. And now, the CDC is basically saying, oh yeah, like it seems like that is what's happening, is the flu is still around and it's just getting miscategorized, right? You can't do that, man. It's like you ban people and then later on it turns out that they were right. Come on. But when you go and you look at the numbers, coronavirus ends up being like a really, really bad flu season on top of what was the flu, you know? So like if 15,000 people die in a average flu season and a bad one is 30,000, then it was like you got 15,000 died from flu, 30,000 died from coronavirus, and you get 45,000 deaths total or whatever the deal is. I think it was actually more than that though in 2020, wasn't it? I don't know. We could go back and look, but it was like a really, really bad. Now, at the same time, though, the stress that it's had on the healthcare system definitely says to me that it was worthy of concern. And this is another place where I have a really big problem with this because, okay. So first of all, how do we fix this problem? You hear anybody saying, well, this is what we need to do now for our healthcare system? Because look, this isn't going to go away. Obviously, coronavirus sounds like it's we're over the worst of it, right? But there's going to be something else. And maybe we're not so lucky with that something else in terms of, you know, being able to get a vaccine and all of those sorts of things, right? Or maybe that something else has the much more contagious variant like Omicron right out of the gate. And then you're really going to have a problem with your hospital. So this is a problem that we have to solve, isn't it? It's very, very much a problem that we have to solve. Making our healthcare system robust enough that we can handle a surge in cases like that. And you know what? If you talk about it in the United States, the very first thing that people on the left would say is, well, that's why we need a socialized healthcare system. But you know what? Those socialized healthcare systems in Europe, they didn't fare very well at all. Right? So this is a problem that that the whole world has that we need to solve, and I don't see anybody talking about. What about that shirtless dude with the sunglasses who pretty much called it? Yeah, I mean I think that there must be to some extent you know, even though coronavirus is something that should be that we should be concerned about, and that government should be making policy around to try and um, you know, prevent a disaster like the hospitals being overflooded and everything, and massive amounts of deaths. At the same time, it's also, there's always going to be some amount of government overreaching simply to increase their power. And you can just kind of see that. You just read this story with the French president, where he was basically like, I want to piss off the unvaccinated and all of that. Like, come on, that is not the way you want to do things. That is not that's not what you do if your concern is the well-being of the people in your country. That's what you say when you're trying to consolidate power, right? You're trying to demoralize the people that are on the other side. That's why you say that stuff, is you're trying to demoralize them. You're not trying to get them vaccinated. You're just trying to get them to give up on fighting back against restrictions. Because saying that isn't going to convince anybody to get a vaccine. Not a single person. And surely the French president isn't that stupid thinking that taking that approach is going to help, you know? That one kind of makes me mad. Okay, so I said that, hey, maybe we would see a bit of a sell. I want to give it a little bit more room before I maybe try to work in a position. The treasuries, even though the treasuries that come back here, they kind of just been floating here, so. Oh, don't say that. You got the vaccine, you're fine, then you're fine, you're good. Oh, jeez. So, there's this, man, this is a completely different segue to something else political, but it's something worth noting. You can go and find it. The big thought piece on the right this week is an article where the author basically claims that the first instance of wokeness in the public sphere, or, you know, culture, was Glee, and that you can trace everything about wokeness back to Glee. And you can see how the Glee fandom developed to kind of predict where wokeness is going in general. And I'm a little skeptical about, like, trying to say, well, if it wasn't for Glee, the wokeness wouldn't be a thing, because that's basically what the article tries to argue. But it was still really interesting, and it's definitely going to become a significant part of conservative thought in the future, I think. Okay, so that's a little bit more. 4770 was kind of where I was like thinking, okay. So let's keep an eye on it here. It doesn't seem like there's a decent amount of iceberging on the way down there, but you're going to see a lot of that in the first 5 minutes anyways. We'll see if the treasuries decide to tick up again. Okay. So there was a good little bit of a pullback. I must say, the degree of the moves is not really giving you a whole lot of room for error here in the ES, is it? Okay. Oh, I did something. I had put one out there before that I didn't. Okay, well, Well, that's okay. Just take one off right there if I'm so lucky. Giddy up. Wonder if the reason I'm getting all of these resets and everything is just because I have too many instruments up now. What do you think? You're looking at NFTs and they feel like early day. Well, yeah, because what they're doing is they're uh, faking all of the activity. So you know what happened, right? Gary V, Mr. Gary Vaynerchuk, reading about this NFT thing, and he hears about something called CryptoPunks. And he's like, oh my gosh, CryptoPunks gives you access to exclusive events and everything. This is going to be like the new big thing. So here's what he did. He went and he called up like 50 of his influencer friends, like all of the big, Twitter personalities with the big fat followings, Mr. Beast, all of these guys, right? He gets them all in a Zoom call and he says, hey guys, this is going to be the next big thing, CryptoPunks, right? And they all go and buy it. Okay, now if you had done that with a small cap stock, some penny stock, that would land you in jail. That's colluded buying. You can't do that. But because it's like artwork and it's in the cryptocurrency sphere, probably you get away with it. It's certainly immoral, in my opinion. I don't think that Gary V even realizes that it's a problem, because Mr. Beast and his buddies were like bragging about it on a podcast. This is how we know that this happened. It was like that scene in the Big Short where they're talking to the people that write the loans, and he's like, I don't get it. Why are they confessing to us? And he says, they're not confessing, they're bragging. You remember that scene? Okay, so you know what I'm going to do here? Because this is like the third time it's freaking done that now. I'm just going to see if it has something to do with the feed not liking how many instruments I have open. So I'm going to close that one, and that one, and that one. And heck, why not the YM in the NQ? You can just have it like that. Now we have all this room, we can like expand things out. We'll see. Anyways, so what happened? You got all of his buddies to go and buy it so that they'd get the activity, right? And it looks like that you make millions of dollars doing it. And then what you can do on top of that is, you do wash trades, right? So I've seen people make claims where they're like, oh, I made $50 million from NFTs and everything. And it's like, yeah, but is it in dollars? Because if it's in dollars, you probably haven't made that much yet. You still have it in those NFTs because you bought an NFT that for $1 million and you still think that it's going to sell for more, then good luck. And it's kind of one of those things where it's like, yes, probably there's going to be a few people that could make life-changing money from NFTs. But like 95% of the people that are getting involved in it right now lose money from it. Like there's a thing where like all the artists are like putting their NFTs up there and everything now because they've seen it. And they're paying because you have to pay fees to do it. You have to pay fees to get like to mint it and everything. And yeah, they're losing money. They're paying more on the minting fees than they get from, from selling it. So they don't recoup their costs. My screen just feels so barren now. I don't know what to do. Doesn't seem right. I forgot to, should have done that. So, oops, on my part. This has been a pretty interesting flow here in ES, wouldn't you say? Seems like NFTs took a life. Well, yeah, but like that's the thing is it's very clear to me that if you just go out there and you claim that you're making millions of dollars, you're going to get attention, you know? You don't have to have any kind of proof whatsoever. You just have to make the claim and everybody's like, "Oh, really? What? I want to do that too." Nobody questions it. Okay, so we had a decent, downturn, and then we just had a pretty good recovery, and now the bear move is coming in again. So the S&P 500 is experiencing quite a little fight here. And I think that what we want to do here with that is try to start to play a range here, because we may be entering into it's just going to chop back and forth a lot, right? So let's manage this a little bit and try and take a little bit of a closer target around that 77. Most people who make that much money keep their mouth shut. Well, not necessarily though. There's a lot of people that make money that aren't that smart, or it's not even that they're not that smart, but like the sorts of things that would the sort of information that we have that tells you really shouldn't share that. They don't necessarily have that. It took decades of empirical research for us to learn that your orders had impact and that sharing it around could eliminate the inefficiency and things like that, right? So there's going to be lots of people that had success, whether it was a system that really worked or they were just lucky, that are going to turn around and try and share it with everybody and sell it. But it's almost always going to be the case that everybody that buys it and tries to use it doesn't have the same results. Right? That's the problem. Well, cumulative delta seems okay to mixed. Price isn't necessarily holding as much as we'd like to see. I'm not really seeing any kind of like serious absorption or aberrations in the order flow in the MES right now. So that still kind of looks like chop to me. But I am seeing like CL is on a tear today, all the way up to 78.25 now. You're gonna buy a board monkey. It's you know, who knows where the next thing is going to be. The only thing I can see in Bitcoin, I have a hard time seeing beyond. Why are we chopping around at 4,500 for so long, and can the market really handle it if they decide to probe to the downside? And I have a hard time seeing much beyond that, you know? Like trying to get involved in NFTs and buying up shit coins now for the next, you know, it just feels like I don't want to bother. It just seems like a risky game that at the current prices isn't worth the risk, isn't worth the grief you can put yourself through, you know? Guess if you have the money to lose. Okay, well, since I closed a bunch of those instruments, it's doing me better here. Although I kind of feel like dumb trying to trade this without the NASDAQ and the YM on it, right? We don't necessarily need gold and oil up here, though, if we're not going to actively trade them. Dollar is getting on a pretty good downturn this morning. Has Bitcoin been recovering because of that? A little, but not really. I kind of want to come over here and see. I'm going to look at it on a different screen. I'm gonna keep it to myself. But I have an oil trade on, and I want to know how much money I've made on it now. Not bad. Not bad. Oh, that's super interesting. My portfolio, even though the S&P 500 seems to be struggling here today, my portfolio is doing quite well. Quite well today. Because I'm all long rates and gold and stuff. Well, so I'm wondering here if I need to bring my expectations in even more in the ES is just being real choppy here, huh? $81 seems a little high. You see some big sellers in Europe if we cannot keep up. You mean in the treasuries? It's coming up faster now. There's some big orders up above us in the ES, isn't there? And that was 500 lots at 48, 47.80, 600 at 81.50. It's kind of looked like those got left behind when we were kind of a little bit higher and we plunged back down through there, you know? Okay, cool. I'm still kind of thinking here about like, okay, if we can't have the so many DOMs up because the data feed doesn't like it, because that really seems like that's the case. Is like too much activity and then it just resets on you, which sucks. What do I want to show? Do we just expand these micro treasuries out a little bit and bring back in the volume profiles or something like that? Oh no, when we have them all on there. I don't know. These were a little bit wider at one point though, weren't they? I'm pretty sure they were. And maybe put like an ES chart over here. Something really big and clear so that the chartists can keep up with us. Oh, you got a new one. Oh, there you go. It's very blue. It's very blue. 70. Okay. If it goes, it's very possible still. You're trying to sell us on it, aren't you? This is what's going to happen is it's going to sell. And then he's going to be like, guys, you need to get in on this. Here's another one. You should buy it. I know how this game works. You have to convince other people to do it. I hate that game. Like, I feel like if it's a good investment, if it's really a good trade, you shouldn't have to say anything, you know? Like if Bitcoin is so great, shouldn't have to say anything. It should be hard. Well, I guess it kind of is hard to get people to shut up about it, isn't it? Well, I'm looking at this. Oh, actually, hold on. What did I want to do? Yeah, okay. I'm looking at this like, is it going to break out of the upside? They got up to 83 and then they came back down, right? So we're still kind of in a chop zone. If it went higher, oh man. If the S&P 500 went higher, there could be some wild stuff that could happen today. At least for me, because I'm just looking at these like the banks. The banks haven't really taken off today. But like these small cap techs, they're doing okay. Oil just looks amazing today, though. Didn't get my fill. It's close. It's a point away. Suppose I shall cancel that and wait around for another round. Oh, I just right-clicked and downloaded it. Don't tell anyone. Okay. You all set NFTs for it. You know, well, I actually have an idea for an NFT, but I don't know. I kind of feel like, number one, I'm gonna go and mint it, and I'm gonna lose $100 minting it, right? And number two, like, I feel like I would just be contributing to the problem, you know. So I haven't done it, but I have an NFT idea that I think would be really good. But I'll keep it to myself. Maybe now that I've told you that I've done that, and maybe now I'm obligated to do it. I don't know. Maybe if you bug me enough, people in the don't donate $100 in the stream, and I'll go make my NFT. How about that? Is it 200 to mint? Yeah. Okay. So if we're able to raise $200 here through donations in chat, then we'll go and mint the NFT. Then I'll tell you what it is, and well, I'll mint it first, and then I'll show it to you. It'll be pretty cool. And we'll put it up, and we'll sell it for, let's say, $2 million. We'll put it up for $2 million. Other two. Oh, you know what? That's actually, we should do it on Solana. Yeah, we should do it on Solana so that we can be environmentally conscious. Oh, you know what? I totally forgot about the U.S. Services PMI. Why it is? Oh, because I don't have the news squawk going. I'm so dumb. U.S. Market Services PMI final 57.6 versus an expected 57.5. Ah, that's why not much happened today. We do got crude oil numbers at the bottom of the hour, though. That should be fun. Although oil is up pretty high, so if they made a move higher off of those numbers, that would be something else. So probably shouldn't expect too much for that. No. Discovery Trading Group tweets, someone asked me where the high tick is currently in the overnight repos. Just a wisp under 2 trillion, and the window is still open to all comers. What? Did you think it was going to go down? Don't worry though, everything is fine. That's why equity markets are up. Yeah, I don't think that there's any limit to how high that can get. In fact, didn't they predict that it was going to go up to 2K? They should really make a cross-chain bridge for NFTs, because but all of the big guys the big fish all have Ethereum, and they need to do their watch trades, so that's why it's going to happen there, right? We'll do it on whatever the popular what is it called? Ocean something such and such? Not DigitalOcean. DigitalOcean is that cloud hosting platform. Let's search the internet. NFT Ocean. OpenSea.io. That's we should do it on we should mint it on OpenSea.io. Yeah. And then I have to connect my wallet. Well, you guys are gonna have to give me $200 first. Oh, come on, ES. If you could just bust like 47.85. We could have so much fun today. Come on. J Pow in 2 minutes? Wait, hold on. I don't have that. Oh, 2 p.m. Yeah. FOMC meeting minutes. Yes, 2 p.m. Eastern time. This is no. Please, no. I'm working so hard. I don't want to become an NFT channel. I kind of like, here's the thing is like, I kind of regret doing the original Bitcoin stuff because it did help. I mean, it did launch the channel in the beginning and everything, and it did help. And you've been cool, Air Cages, but it also attracted a bunch of shitheads from the cryptocurrency community. A lot of people that just say a lot of dumb things, you know. You've just been fun, but there's been some guys that have come in and just give like bad advice. It's really frustrating. And we finally kind of got to the spot. Like Gary was a really good example. So I took a trade off stream in an options chain, and then I talked about it. And he was saying, oh yeah, I think I remember that because I was trying to manipulate the Vega on it as you were taking it. And I'm like, oh, okay. So now you're trying to manipulate my trades as I'm taking them on, you know, like, why am I keeping you around? No, thank you. No, thank you. Goodbye. No. And then there was so many times where, so like for instance, in oil, he was like, nah, you don't want to play this in oil. Okay. It's the 78 now. So he was also one of the many. Oh my gosh. There's this guy. Okay. You know what the one that stresses me out the most this year? No, I'm not. Of course not. He's a crypto. I really think that Gary was attracted here by the crypto, and a lot of the things that he was saying was because of the crypto. I think it's a better explanation for why it was with some of the cases where he was like really, really wrong. I think it can be explained by that he was taking the approach from like a cryptocurrency perspective. Anyways, that's not the one that bothers me. The one that bothers me the most is there's this guy named Volatility in the futures trading Discord, and he was sad. His whole thing was the Federal Reserve isn't going to raise it. The Federal Reserve isn't going to taper, right? So remember, it was like back in August, it was like, first it was maybe they're going to do something at Jackson Hole, and then they really didn't announce anything at Jackson Hole, but pretty much all of the speakers in their interviews before said that they were leaning towards that they were going to taper in October, November. Like all of them said that. And so we're like, yep, the Federal Reserve is going to taper. And this guy is like, no, they're not going to taper. They're not going to taper. And just kept posting stuff and information that was just like blatantly wrong. And his approach was just blatantly wrong. And he liked that guy. I don't remember the name of the guy's name, but there's this analyst that Futures Trader 71 has on his channel from time to time that talks about interest rates, and he kind of takes the same approach as this guy. They're like, well, the Federal Reserve doesn't actually have any control over the market. They're actually impotent. They don't control interest rates, which is not. Listen, orders have impact. Okay, if the Federal Reserve comes in and buys or sells something, then it moves it. Okay, but he was posting a lot of other stuff that was just like that was kind of like the basis of it, and then he was posting all this other stuff that was just like complete nonsense. And I kept like, trying to be gentle about it. being like, well, here's why this technical analysis stuff doesn't work. Here's why what you're saying isn't really accurate. Here's the data that we have. Okay. Does the Federal Reserve's balance sheet, when there changes in the balance sheet, change the interest rate? Yes, it does. Okay. And like we showed it statistically and everything else like this. And then the interest rates started rising, right? And he got really belligerent. and he started doing the thing like, okay, well, if the reason that you should listen to me is because I'm making so much money. And I was like, okay, prove it then. And you don't want to do it. So then he got banned, right? That's the thing that will kill you just to warn you guys. You get on the Discord. What gets you banned on Discord? Holding yourself as an authority in an argument without backing up your performance. That's what will kill you. Like, if you can prove that you've made money every year for the past 5 years from your trading strategy, you can say whatever you want. Whatever you want. Nobody's ever done it. So if you can't do that, then you're going to have to prove your arguments with empirical evidence by showing us that the thing that you're saying is actually true from evidence in the markets. Or if you're making a claim about the way that the markets works, you show us the policy documents or the laws or whatever it is that makes it that it works that way, right? He didn't want to do that. I changed my mind. GT3 fit. You're right. I was saying like 4 because I was just like spitballing and throwing numbers out, but I say 5 years now because 5 years is a nice round number. So that's my standard. If you can show me 5 years worth of, that's a really high bar, isn't it? It's a super high bar. There's probably only a handful of people, retail traders, trading futures profitable every year over the course of 5 years. And probably even more rare, them not just being profitable all 5 of those years, but beating the market all 5 of those years. 5 years is very high. It's a very high standard. Like, most of these professionals don't match this, right? Most professionals don't hit that. Like, whatever this little CTA experiment that we got going on here. What does it teach us? Hey, like, if you're just trying to duplicate the performance of the instrument, maybe get a little bit of an edge on the performance of the instrument, which means that you're in all the time and you just manage contracts as it goes around. Yeah, it's not a bad. That's probably why that's what most CTAs do, because you don't really have to predict it or anything like that. If you have a losing year, it's just, well, we're a short bond fund and bonds went up this year and that's why we lost money. It's that simple. You got the exposure to the instrument that you wanted. You lost less than if you were actually in the instrument itself on your own. So, hey, we still did good. Like, now you're talking crazy. Yeah. Just saying. I don't know what else to tell people to get them into thinking about using empirical evidence in their arguments rather than appeal to authority, right? Because every day trading argument that I ever see on Reddit and whatever, it always boils down to an appeal to authority. You should listen to me because I've made money doing it, or whatever the deal is. Oh, okay, if you've made money doing it, then prove that. And then they don't. Maybe you should just prove that the market behaves the way that you say it does instead. And if you can't do that, I say that the reason you can't do that is because you don't actually know for sure that it does that or not. Am I wrong? When I come in and I say stuff, when I say that the market tends to exhibit a square root law of meta order impact, I only say that because there's like 20 years worth of scholarly studies that show this over countless data sets. The amount of evidence that this happens is like overwhelming. I don't know. I really don't get. How is it? You have something like the number of studies on this one thing. Okay. The impact of large meta orders is like an order that gets split up by a firm, executed over time, right? Okay. What the net impact of an order like that of a certain sizes tends to follow the square root law. Okay. Why? How can it be the scholarly world spends so much time on this one thing? There are literally like 36 studies or something like that. Like if you go get the book Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchard. I don't know how you say it. Anyways, he's a great guy. There's so many, he cites so many papers in that book. It's like every page has like a source. It's nuts. It's nuts. The number of research studies that they cite in that. And yet you'll never hear a single retail trader talk about it. Not a single retail trader talk about it. It's like the one thing, the one most empirically backed, consistent behavior in markets. No retail trader talks about it. What the hell is with that? Why are we that clueless? Because we just never bothered to look. You're all too busy looking for head and shoulders patterns in the charts. I don't understand. It's like empirical evidence, and yet nobody wants to go and use empirical evidence in their arguments or their trading. I don't get it. Well, we're going to change it. This is exactly why I say we on this channel, I realize now that the channel is more valuable. Like day traders would approach the markets differently if they understood these things. The world would, politicians would consider some changes if they understood these things. The society as a whole, like our whole idea, what we believe about capitalism, I think changes once we understand market microstructure. It's an important thing that we need to get out. We need to do a better job of getting it. So I'm like determined to be the evangelist and build the channel up and get the message out. You want me to link that book? Let's see if I can get you a small link. Yes, I can. There it is on Amazon. Just warning you though, it's a hefty book. It's not a huge book. When you get it in the mail, you're not gonna look too intimidating to you. But then you open it up and you realize that every chapter has, proves these big complicated mathematical theorems. It's like, oh, okay. It's complicated stuff. So I hope you love math. But to me, that book is the single largest collection of empirically based market microstructure research available. And every day trader should be required to read that book before they start day trading. That's what I think. I mean, that is a pretty high bar to set, but it's just like, if you understood that stuff, you wouldn't do things the way that you do them. Right? Like, especially since he pretty conclusively shows that markets are really statistically efficient, and it's probably not the most fertile ground for retail. He doesn't say that, but I mean, I think that that's the implication. Is if you're a retail trader, it's kind of pointless to try and use statistical inefficiencies as the basis of your trading. That was the biggest takeaway that I got from it. And that if you are going to pursue those technical bases, there's 3 or 4 different things in there that you're probably going to have to include in your market making system just to even be competitive. But the book shows you how to do them. Of course, it doesn't say it like that. It just says here's these models and everything. But like the Kyle model from 1985, Mr. Albert Kyle. That's a really good basis for a market making system. You're going to want to incorporate that in some form in your market making system if you're going to do that. So on and so forth. Well, volatility here in the S&P 500 appears to be contracting a little bit. They still can't break out onto the upside. I've missed many opportunities here, I think, to get in and out, unfortunately. Like I should have added one here. I could take one off here. We shall see. Man, I love getting in on that rant, man. I think that I sit and I stew about this so much that when I get the opportunity to talk about it on stream, I just go ham with it. Because I find it so frustrating that there's nobody else in the retail space to talk about this stuff when it's like the only thing that's really empirically based. The market ear tweets US 10-year 1.7%. The only thing that matters. Is that it? 1.7% is too high for them stocks, guys. Apparently. We still got about 10 minutes to the bottom of the hour. We're going to get those oil numbers. That could be. I tell you what, if it's like a draw, if it ends up being a draw, like oil could do some wacky things, don't you think? Because oil's already up really good today. That said, the 10-year here, I'm kind of glad that I got myself stuck in this ES trade because the 10-year has basically been in a 3-point range since for like 2 hours now, like the whole session. Like I always thought it might be a little quiet there because of the FOMC meeting minutes. Yeah, well, Alligator said that. Sorry about that. My OBS disconnected and reconnected. Hey, Big Toasty, how are you? I appreciate that you come in every day, even though you're, later towards the session and come in and say, hey. I do. And all you guys that are following. By the way, if you're new, make sure you click that subscribe button and click the bell icon so that you can be sure to catch future streams. You want to be able to find the stream really fast in the morning. And also, you don't want to miss when I put the one-off videos out. I don't necessarily get it every week. I'm kind of more like every other week. But so you really want to have the bell icon, and we have a high percentage of viewers with a bell icon. Click the bell icon. So do that and set it to all posts or whatever, so you don't miss a thing. And also make sure to check out the links in the video description. So I have some indicators. Let's kind of tell you. So over the Christmas break, used to be that my indicators were on a subscription plan, but you guys all told me that you would very much prefer to just pay $100 one time, and I totally understand that. So we changed the indicator package to be you buy it once for $100 and then it's yours forever. And you can demo it for 2 weeks. So you check out speculatorset.com. Link is in the video description. Anyways, I had a person email me and they're like, did you like put a typo? You must have put a typo because it's no way everybody else is selling this for $1,000. You must not have meant $100, but no, it's $100 because I think that you're all going to buy it. If you're using NinjaTrader, I think you're going to buy it because it's that useful. These are tools that I feel like no trader should be without. So I did that, but I thought it was really funny. I don't know if they're like trying to brown nose or somehow or something, but it was funny that they emailed me about that. So make sure you check that out if you have NinjaTrader, or if you're thinking about buying Jigsaw. I have Jigsaw for my Dom here. I have $100 off coupon for that in the video description. And we also have links to like the TikTok and Twitter and Discords and all that stuff. So make sure you check those all out. Okay, well, that last bit of upside in ES looks very encouraging. They still haven't gotten above 85 and into new highs to where ES could look really good, but let's just kind of monitor this. I ended up having to take, I really wanted to let all 3 or 4 of these contracts ride past 85, and because of the range I took some of them off, but we can let this last one ride and just see how far it gets, right? Was not a bad trade in the yes. I think if I change anything, I would have taken the second contract a lot lower. But look, I mean, our average price is 47.73. That's not terrible. So it's not terrible. Any guess on? I don't know. The thing that I'm so just realize that overnight low was 76.60, and we're at 78.36. So oil has had a pretty big move today. Are they front running these numbers that are about to come out? It seems like that's one likely explanation for why it's trading like this. But on the other hand, if the number comes out and it's a draw based on the expectations, and oil does make a move off of that, if they make a move off of that, us being as high as they are already, it would be super crazy. Seems like it's a lot less likely, because probably the more likely case is that they're pricing something in, that they're front running it, right? Because I don't know of any other reason why oil would necessarily be moving like this today, huh? Let me come in here, actually. Let's go to the News Squawk blog. I just didn't read very much in their morning rundown. Today's EIA releases is similarly expected to show a headline draw and builds amongst the internals. Elsewhere, more broadly, geopolitics remain in focus, with Reuters sources reporting that a rocket attack has hit a military base in proximity to Baghdad airport. Yeah, so Oh, there's also something about a pipeline. So I don't know. Could be really interesting over here in oil. So we'll see. It could be really interesting, but it could also just be really non-eventful. Don't you just hate those kinds of news releases where you know it's either going to be like a huge deal or nothing, and then it happens and it's nothing? You're just like, oh. I don't know. Now that the S&P 500 is above 87, like I think they're looking pretty nice here. Man, I use Fidelity as my stockbroker, and their desktop app takes forever. Takes forever to load up. So now I've moved over to using their little web interface thing, but I just kind of feel dumb every time I do it. I'm gonna do it this way. I want to see, because there's the oil ETF, United States Oil Fund, USO. What is it at? It's at 5640. It sure has been on a tear past few days though. Yes, sir. I would like to see it somewhere above 60 at some point. That's where it was in October. That would kind of be like the higher, So that's kind of like a price target up above us. That's interesting to see if it can get to. But we'll see. Let's see. Some oil equities hitting 52-week high. Yeah. It's not just oil either. It's like the miners, and gold is doing really well today. It's like all of the commodity names seem to be doing well, which kind of suggests to me like they're making the inflation play again. I jinxed Hood. Is that what it was? It's because I said something, huh? Remember, GT350, being superstitious is bad luck. Being superstitious is bad luck. If you ever hear that anywhere else, just remember that I came up with that one, right? You heard that from me. And I'm telling you, it's the freaking truth. Being superstitious is bad luck, because then you're all in your head about, because here's the number. Okay, so it was a draw, but it wasn't quite as big of a draw as they expected. And oil is coming back a little bit. Not too much, though. Gasoline inventories was like a really big build. So it was 10 million versus 1.75 million. And the distillate, but the crude oil inventories was a draw. It just wasn't as big of a draw as they thought. Negative 2.144 versus negative 3.65. So the oil drop. Yeah, you're right. When I look at the chart, it's not too much, but 50 cents is a lot, isn't it? You're totally right. You're totally right. But I'm just saying that even with that, oil's still having a really good day. Now, who knows? Maybe now because of that, they completely retrace the whole thing. that would be something. But I guess I can do this. Huh. Have this like that. There we go. Like that, something like that. Or maybe we just keep that one minimized and we make we give our chart for the dollar index more room. Ah, how about that? Oh, you'd like oil to dump because you're in cash and you want to buy it? Well, there's still a 78 though. They've limited the downside so far. I guess that's because they expected it to be a draw. It just wasn't as bad of a draw as they thought. The thing you got to remember in oil is that the big argument in oil is, do the oil producing countries really have the capacity that they claim? And at the last OPEC meeting, it was kind of turning into, hey, you guys aren't producing as much oil as you said you would. And it's like they can't. So that's kind of starting to drive the price of oil up big again. It looks like Treasuries come down a little bit there, back to 1 point. Well, actually up above. Oh, not up above. I would like to see them get back to 1.75 or something. 1.7 rather, up here. 1.7. You were bang on. Yeah, thank you. Well, the reason I'm bang on is because when Omicron happened, oil was plunging and I wanted to get long, and so I ended up doing a bunch of research about it, and I was right, and I just played it wrong, and I lost a lot of money on it. But then I took another little trade on it to try and save face, I guess. I went and I realized that trying to do this on micro futures was dumb, so I went and I put it in a stock. OPEC is pretty much maxed out, and global investment is pretty much nil. Yeah, there you go. The way better way of putting it. But the whole thing is that there's this argument between the analysts. Like the Goldman Sachs analysts are saying they don't have this capacity. And 2 weeks ago, the market was saying that they do. But then the OPEC meeting came along and they were like, oh, actually, I guess they don't. Which I thought was kind of odd, but whatever. They were probably reacting more to Omicron than they were anything else. With anybody else here? Oh. And what about Michelle? Oh. Okay. We're babysitting right now. I need to do something about, man, the air is so dry and I'm getting like really chapped lips lately. So is this move in the treasuries happening because of the oil? It could be. Hmm. I should also note that gold has given a lot back, quite a bit of its gains. About $5 worth of that. So here's an interesting one. Bill Blue Line on Twitter. It is my belief, with no data backing, just hard earned experience, that when notes and bonds have moves of this magnitude in the fourth or first quarter, it is very rarely only a 2-day event. Could consider this day 10. These are more prolonged moves, and I am not a bond bear. I think that he has a really good point there. When we've had really big moves in bonds, it tends to be something that's like there's a big move at the beginning of the year and then it just kind of trends the rest of the year too. That happened the year that Donald Trump became president, for instance. It's like they make the most important moves at the beginning of the year and that kind of sets the pace for the rest of the year in bonds. It's definitely a behavior that I've noticed from my own experience. Okay, so there's a zero hedge story we should read. I was checking to see if they had anything about the oil yet, but they don't. Okay. Zero hedge. You know, I sure read a lot of zero hedge to you guys, considering that they blocked me on Twitter. You're watching zero hedge. Just unblock me. It's okay. You can handle the truth about cryptocurrencies. I'm a real person. Okay. Bond bulls had the jam stolen from their donut to start 2022. But the question is, with today's relative stability, is the bond bloodbath over for now? Question mark. To answer that question, we need to consider what drove this sudden, unrelenting 2-day scream higher in yields. Yeah, because the whole thing has been like, should have happened a long time ago, and why did it happen now? It's a good question. Bloomberg's Mark Cudmore highlights two significant drivers that are feeding off each other right now. One is only temporary, and the other will likely evolve into something different. First, new year investment grade bond issuance is putting upward pressure on yields, exacerbated by still poor liquidity. As we noted earlier, this was the heaviest calendar since the first week of September, meaning rate lock demand was an extremely significant driver of yield upside in the last 2 days. This can become a short-term, self-feeding dynamic, but it's not a fundamental driver that can sustain over the medium term. Okay, cool. Makes sense. Second, Cudmore notes that a consensus is building that Omicron's economic impact will be more about exacerbating supply-side issues, hence boosting inflation rather than hurting aggregate demand too much. I told you guys this one like 4 weeks ago, right? The Federal Reserve made a change internally where basically their thinking changed to the risks from Omicron are actually that we get more inflation. Hence, we need to taper faster. That's why this is all happening the way that it is. Okay. The corollary is that if rate hikes do need to be stalled due to Omicron's growth impact, the more will ultimately be needed. Then more will ultimately be needed, and hence a steeper curve. Okay. Let's read that again. The corollary is that if rate hikes do need to be stalled due to Omicron's growth impact, okay, so if Omicron does have an impact on growth, then more will ultimately be needed, and hence a steeper curve. So more easy money policy. And that's why the curve is getting steeper. What do you mean he told me? I'm telling you, I'm making money on things. Every trade there was one that he kind of argued with me on, and I like waited like a week or two later and I got into it. And if I had just bought like a later strike price, like if I had gone out a month out further, I would have worked. But almost everyone that he's talked about, he was wrong. And he was talking about like USO options, and USO is like 55 now. Anyways, let's see what it does. There is a third potential driver of higher rates, as the Washington Post claims that U.S. lawmakers have held early talks on new COVID relief. Nomura's Rob Dent pours cold water all over that idea. I would interpret this headline with caution for 3 reasons. First, we have heard very little about this from congressional leadership. The House is out. The Senate is bogged down with Build Back Better and voting rights. There is not a lot of momentum for another round of stimulus, and even the package that these lawmakers discussed was only $68 billion. Secondly, there is a growing consensus that Omicron is different from earlier waves in how mild it is, and growing speculation that it could mark a turning point for when the pandemic becomes endemic. The fast spread of Omicron means cases could subside just as quickly, dampening the need for additional stimulus as early as February. Very good. Okay. Third, the broader appetite in Congress for enacting additional stimulus is low. That has been reflected in Democrats' inability to extend some of the pandemic-related programs like enhanced unemployment benefits and the expanded child tax credit, which expired this month. If the U.S. is forced to go into another lockdown, there may be renewed interest in another package, but so far we do not appear to be on that track. My wife says that I'm not serious enough. Well, there you go. Sometimes I'm not serious. I struggle. Like sometimes I feel like I should be more serious about my trading, but then sometimes I'm like, Seth, you need to relax. You just need to. You're too high strung. I think I was a little too high strung in December. I have this little note here on my monitor that says relax, be cool. What happens, because I feel like I was just a little bit too in my head and stressed over wanting everything to just be perfect. Okay. The bottom line is that we probably shouldn't expect much out of Washington this year unless things get really bad, i.e. a new completely vaccine-resistant variant. Outside of that, there may be narrower efforts to do something very simple like pass airline aid for a few $1 billion, but that may be it. One final suggestion for the rise in yields is a narrative that highlights a confidence that the economy can handle policy tightening. However, as Nomura's Charlie Miguelia notes, the bond market is still going to be very susceptible to fits and starts, particularly with the Fed's clear messaging trial balloons on balance sheet runoff taking a step further yesterday with the Wall Street Journal's Fed whisperer, Nick Timiraos piece yesterday. Oh, I missed this. Maybe I need to. What do you think? Should I have bought a Wall Street Journal subscription instead of a Bloomberg subscription? I'm kind of wondering because I would have liked to have read that piece. Well, let's see what they say. Additional comments of said Wall Street Journal balance sheet runoff piece, again from Nomura economist Rob Dent. Termos usually has a good preview for pieces pieces for messages. Usually has good preview pieces for messages the Fed wants out ahead of key releases. The timing, one day before the Fed December FOMC meeting minutes are released, is probably not a coincidence. The article notes that Fed officials began to debate runoff at the December meeting. Powell alluded to this, so we are largely expecting discussions on it in tomorrow's minutes release, but the FOMC may not want to surprise people with that section. It's possible the minutes will be more hawkish than what Powell suggested at the press conference, similar to November. We continue to believe the Fed will announce balance sheet runoff at the July meeting, effective August, with larger caps and smaller scale up relative to the post-Great Financial Crisis period. Okay, so that means you think it's probably better to save the money. The problem I have, I tell you what, like zero hedge, I get more actionable. Like this piece that we're reading right here, this is gold, right? This is going to sustain us and our views of what future flows may be for the next month. You know, like these sorts of pieces are gold. Now, it's not zero hedge really doing it. They're just summarizing what the biggest Wall Street analysts out there are saying, right? And I don't get that from CNBC, Bloomberg, Financial Times, Wall Street Journal. I get it from zero hedge. But then, and zero hedge from time to time will have a piece that's only for subscribers, but it doesn't happen enough, I feel, to justify being a subscriber. Now they do have their little dump where you pay and you get all of the people just put things in a bin, so you get the reports earlier or whatever. But that's a lot more expensive. So yeah, it's drawing everyone. What's the yield at here? We're not quite, here at this spot, 7.6 doesn't look too bad. I'm not going to do it because we're kind of coming up on when I'm going to stop the stream, but I think it's pretty likely that sometime later in the week we'll touch 1.7. So I'm kind of not sure if they're really going to push lower right. I don't know. So here's the thing is, look at the ZB. Like the ZB is barely budged. So you take it here in the 10-year yield, you might not get much out of it. Okay. However, as Miguel has made clear previously, the backtest of Fed policy tightening running simultaneously with balance sheet runoff has not been kind. See Q4 of 2018, meaning there's still absolutely room for this helpful pro-cyclical rally to get washed out in a risk-off duration type trade at the first sign of a harder economic slowdown, or markets tantruming with enhanced volatility, i.e. when Powell's facepalm, long way from neutral plus balance sheet unwind on autopilot comments absolutely nuked the S&P 20% down in December of 2018 before he infamously bent the knee to markets under the guise of the unspoken financial conditions third mandate. Yes. The perfect counter. Okay. As Miguel notes, obviously, if this above financial conditions tightening tantrum scenario were to play out in true policy error fashion, we would expect the polar opposite trade to develop from what we are seeing in the first week of 2022, from what is now a risk-seeking pro-cyclical positioning into something that would be more risk-off and likely duration-sensitive. Put simply, any job owning on more aggressive policy tightening and balance sheet shrinkage will prompt a rapid test of the Powell put strike, and with it, a knee-jerk bid for bonds, rejecting the ongoing rise in yields that has already become a theme for many this week. So, is the bloodbath over? We suspect yes for now. Heavy issuance technicals are done. Omicron's upside inflation impact may quickly morph into greater fears about the short-term growth impact. Any hope for new COVID relief is just wishful thinking, and belief in the narrative that higher rates prove the economy is resilient will be shrugged off rapidly as long duration stocks continue to get monkey hammered and the Powell cut is tested. Well, I think that when we look at the numbers, so I'm kind of more interested in like how, what is the right price? And going up into March and you look at the options, the highest activity strike has a yield of 1.9 on it. 1.9. So I say 1.9 to 2% is like the upper end of this. So, but that's for March. So think about like between now and then how we're going to move to do that. Well, if we can make the whole rest of that move in 2 days, and we got like 3 months to do it, right? Probably there's going to be a little bit of a pullback in the treasuries, right? But 1.7 is up, probably also going to be a little bit of a magnet. So it's kind of hard to predict the individual flows from moment to moment here in the markets, at least at the current moment. So here's what I'm thinking, guys. What do you think? As I come over here, I'm going to put the 6E down here. Put the 6E down here. And we get a new pretty chart for the S&P 500. Like we could be like, what do you think? Should it be a 1 minute or a 5 minute? I think you guys all like 1 minute charts better. 1 minute charts are more fun. Here we go. I can put that there like that. Dun, 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 dun. Right? Zoom in a bunch on it. Come on. There we go. Now you got that. Now are all of the chartists happy? Are the chartists like, yes, I know what's going on now? Her cages just really wants me to take trades. Why are you make it a tick chart? Okay, wait. Data series. Okay. I'm going to make it a 1 tick chart. Only 1 day worth of data. And that one will have to be a line on close chart. There you go. And now it's running tick replay. There you go. You want me to? Okay. This one, I'm thinking this area. I don't know. So here's the thing. I have a really hard time keeping track of what the dollar is doing. I seem to screw it up a lot. That's all the room that I've got down there on the bottom. Unless I make my picture shorter, which we could certainly do. I just forgot how to crop it correctly. We'll fix that. Maybe we'll fix that and we'll make the dollar bigger. Okay. Over here on ES. This one is for the chartists. So all of these other things here, I kind of like to have these, but you can hear these, and I don't really use this all that much anymore. So we could make this even bigger, right? Like we could make this bigger. But there's been a lot of streams where it's like it's literally just a chart of the S&P 500 and tons of people watching. I'm like, well, that's stupid. Why did they do that? I want a bunch of people just to watch. Well, hey, that's why we've got to do. We got to put a chart on there because they see DOMs and they don't know what's going on. So we're gonna come in here. Let's just make it a minute because with that we can see more stuff. All right. Oh, we gotta fix a few things here. Actually, we can just do like regular candlesticks with this one. Nah, I think I'll do the candlestick plus plus. Dun, 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 bar with one. Okay. There we go. Oh, wait. Why is it jumbled together? Bar with one, apply. Okay, now with this size, then I can kind of make it a little bit more. 3. Okay. 4. Maybe 4. Okay. And then we can come and put on it the open, high, low, close, right? Previous day. What is it called? Oh, prior day, open, high, low, close. Ta-da. Cool. There we go. We could also put on volume profile. That'd be even more fun. Like, order flow volume profile. Profile type volume, profile period, sessions. Yes. And then down in here, I got this line, developing point of control, visible, extended naked value area and area of control, visible, and label it. Yes. All of these things apply. Oh, that was fast. Oh, why does it do that? Okay. Cool. Now there's a bunch of lines on there that people can read whatever they want. Again, we're back. Hey guys, sorry about that. That's the second time today. What's with that? That's weird. That's unusual. What else? How do I make it so that, well, like when I scroll over to the right, it stays there? Put it on the right. That way we'll always be able to see it. Okay. There we go. There you go. Now you got a sufficiently complicated, except for that the colors don't work at all with that. And I have to change this to be like grays or something. But hey, now the chartists will be happy, right? What do you think? I don't know. We'll see. Anyways, I gotta get going, guys. I will see you tomorrow. And in the meantime, stay